Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Darren Chervitz. He is the Chief Portfolio Manager with Jacob Discovery Fund. We're going to discuss new economy growth stocks. Darren, it's great to have you with us. Welcome to Trade Talks.
Thanks so much for having me, Jill. It's a pleasure.
All right, let's learn more about the fund itself and what your stock selection process is. I understand you focus on microcap in the age of meme stocks.
That's right. I mean, it's the Jacob Discovery Fund, and we are a fund, bottoms-up fund, focused on trying to find companies that are under the radar, under-researched, under-followed, that generally do tend to start in the microcap range. $1 billion or less is, generally speaking, where we're looking in terms of making our initial investment. Although over time, obviously we do hope to see appreciation. And so the fund used to be called the Jacob Microcap Growth Fund. We changed the name of the fund a little over a year ago in order to allow for some of those investments to have the ability to appreciate perhaps beyond that microcap level.
Well, let's talk about the meme stock phenomenon, because some of these microcap stocks have just had a phenomenal move, pushing them over that $1 billion threshold for that reason, when you have, teams and teams of people on social media just driving up valuations. So one, is there a bright spot to the meme stock phenomenon? And two, what are your concerns about valuations?
In terms of the bright spot, we are dealing with stocks that, as I mentioned earlier, that institutional Wall Street largely is avoiding. These are companies that have limited, if any, research coverage on them, and that's where we believe we can add the most value. Now we have a whole new generation of investors who are kind of interested in this side of the marketplace. And the good is that has certainly, even though we've been largely unaffected by the meme stock phenomenon, we haven't had many names like the GameStops or the AMCs that have been a real focus point of that community. Certainly valuations in our space, I think, have appreciated over time, and that has certainly boosted the performance of the Discovery Fund, something we're proud of. Now, we tend to focus on names that I would like to think are a little bit higher quality in terms of the growth, in terms of having perhaps less debt on the balance sheet. Those are names that we generally try to avoid, but still, you'd have to agree that the valuations in this space have certainly increased over time as investor interest has been focused on that level. And valuation is certainly a concern. It becomes more and more difficult to find those type of names that are under the radar and also undervalued, because that's another part of the process.
Right. And Darren, I would imagine, since you're in the microcap space, you spend a lot of time within biotech. Are there any certain areas within the biotech space that look attractive to you?
Sure. So biotechnology is obviously one of those areas where we think we can find significant growth in the microcap space. A lot of times in microcap, you have companies that are trading at low valuations for a good reason. They're struggling companies. In biotech, that's not always the case. These are just new emerging technologies which have risk associated with them, but have a tremendous amount of upside if they are eventually successful. So biotech absolutely is a key focus of the Discovery Fund. It's about, I would say, around a third of the portfolio. And there are so many areas of interest within biotechnology. I'll mention one just briefly, which is gene therapy, which we've seen with the development of these vaccines over the past year, how powerful of a technology that truly is. And we've just begun to kind of scratch the surface of what's going to be possible in the future in terms of those technologies coming to bear and potentially curing a whole host of very serious diseases, which now are not addressed.
Right. And I would also imagine you have some thoughts around SPACs as well, another phenomenon that we've seen in late 2020 and 2021 for sure, just the volume that are coming to market here. What are your thoughts? How do you identify the hidden gems in what's becoming a very crowded space?
Yeah, so obviously, special purpose acquisition companies, SPACs, considered kind of blank check companies where investors give someone money to go out and try and find a potential investment target. They've been exceedingly popular basically since the COVID dip and then rise back in 2020, and it's an incredible phenomenon. The number of companies that we've seen raise money and then go out and try to find companies to buy with those monies, and in large part, I think people are making some poor investment decisions, and a lot of those companies are going to end up being failures, or at least have their valuations reset. However, it is an area of interest of mine in terms of looking at potentially, as you mentioned, kind of hidden gems as we have those expectations failed to be met, valuations will be kind of reset. And I do believe we're not yet there, but I do think probably in the next 6 to 12 months, going to be looking hard at the space to kind of pick through some of the carcasses that I think will be out there. Good companies, but just came out in an environment where there was too much hype and overvaluations.
And before we let you go here, I want to get your thoughts around crypto. I had an analyst on earlier this morning saying that 70,000 for Bitcoin is right around the corner. Are you guys involved in the space at all?
So we are certainly indirectly. We have a number of investments in the Discovery Fund and throughout Jacob Asset Management, which are tied fairly directly to the fortunes of cryptocurrency. We don't own specific crypto coins or tokens, but we're fascinated by the space. Our history as a firm has been in investing in new technologies. Our initial fund was the Jacob Internet Fund, which was launched in the .com kind of boom area. And we see a lot of similarities with cryptocurrencies to what went on in that time frame. And there's good and then there's bad in that. Obviously, the bad is that we do believe that there is a fair amount of speculation, way too much leverage that we're seeing being invested in the space, and the vast majority of these projects and tokens are going to fail, and there's going to be a lot of capital wasted. However, the underlying strength of the technology, the potential use cases for particular cryptocurrencies, I do think is very real, and we're going to see some very significant economic developments and big capital appreciations too over time. So, we have an investment in a cryptocurrency broker called Voyager Digital, which it has been doing phenomenally over the past year, run by a former E-Trade executive. We have another company, UCO, which is a payment processing company that has also been a direct beneficiary of some of those cryptocurrency trends. So it's a huge area of focus for us. There's a little bit of an issue because I do think in order to be successful in investing in specific cryptocurrencies, you have to devote a lot of time and resource into trying to understand the space. So we're trying to play it a little bit more indirectly on that front.
All right, fair enough, Darren. Appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thanks so much, Jill.